Welcome back to Investing Talk podcast. Today we're looking into TSS, that's ticker TSSI. You shared some really interesting reports, and well, our goal here is to figure out what's actually happening with the company. We'll look at how they've been doing lately, what's pushing their growth, potential downsides, and maybe what it all means if you're trying to stay informed about tech investments.
Definitely. It certainly looks like there's a lot to unpack here, especially with those growth numbers jumping out for the reports.
Okay, so let's get into it. I mean, the number everyone's talking about has to be that 523% year-over-year revenue increase. First quarter of 2025 hitting $99 million. What on earth is behind that kind of number?
It's pretty staggering, isn't it?
Yeah. It looks like their procurement segment jumped, get this, 676%, and systems integration up 233%. And the report notes their revenue has been historically kind of up and down, which makes this surge even more, well, noteworthy.
Right. It's the scale of it. A jump like that, it's just not something you see every day. And the fact that it's strong across both procurement and systems integration suggests, something fundamental is changing. Like you said, that history of volatility makes this feel different, like a real shift.
And it's not just the top line, the revenue. Profitability looks much better, too. Diluted EPS first quarter 2025 was $0.12. That's a big jump from basically $0 the year before. So it feels like this growth is actually hitting the bottom line. It's translating into real earnings.
That move into positive EPS is so important. Big revenue is great, but if it doesn't turn into profit, well, the story isn't as strong. Getting to $0.12 suggests they're operating more efficiently, maybe. Or perhaps they have better pricing power now. Could be both.
Okay, so the reports seem to point a finger directly at TSS's focus on AI rack integration services. That puts them right in the middle of this whole AI boom, high-performance computing. The need for AI infrastructure is mentioned again and again as a key driver. But when we say AI rack integration, what does that actually, look like? Is it just bolting servers into a frame?
Good question. It's definitely more involved than just assembly. Think about taking all that specialized AI hardware, the really powerful processors, the networking gear, and then designing and building the physical racks, and crucially, making sure all the interconnections within those racks are optimized. That often includes handling the serious power delivery and the cooling needs. Those are huge for these high-performance AI systems. So yeah, it's engineering, it's the physical build, and making sure it all runs smoothly together.
Right, okay. And to really lean into this, TSS just started production at a new facility, May 7th, 2025. The idea is to seriously boost their data center rack integration capacity. That seems like a very deliberate move, right? Planning for more growth ahead. They also got new debt financing for it.
Absolutely. That new facility is a big bet on continued demand. You don't make that kind of capital investment lightly. It signals they really expect this trend to keep going. And the debt financing, well, that's pretty standard for funding big expansions like this. We'll just need to keep an eye on their debt levels going forward.
So just for clarity, what TSS actually does, they're a U.S. tech company, right? Focused on mission-critical facilities, mostly data centers.
Exactly.
They offer a whole bunch of services, design, engineering, project management, even maintenance for these high-performance data centers. Expertise in power and cooling infrastructure, which you mentioned, is vital, plus things like modular solutions, energy efficiency consulting, custom equipment integration. And they work with big names, Fortune 500s, government cloud providers.
Yeah, and it's important. They're not just, generic data center folks. Specializing in mission critical and having that wide range of services, especially power and cooling, really highlights their focus on the demanding end of the market. And yeah, that client list definitely suggests they've built up some serious credibility and expertise. It's interesting, though, that procurement growth leading the charge. Maybe it suggests they're supplying more of the raw components first, which then feeds into the integration work.
That's a really interesting thought, how those two segments might connect. And, while this Q1 growth is just staggering, it's also worth remembering TSS saw 78% revenue growth in 2023 and 199% over the last 12 months. So this longer-term trend kind of backs up their position in these booming AI and cloud markets. It's not just a one-quarter fluke.
Good point. That longer view provides crucial context, makes the recent surge look less like an anomaly and more like, well, an acceleration of something already happening, tied to those big market shifts.
Now, they're not alone, obviously. It's a competitive space. Big players like Equinix, Digital Realty Trust. But TSS seems to be carving out a niche, right? This focus on high-performance computing, the comprehensive services. They're not just renting out floor space. They're providing the critical guts and the know-how. how does that niche focus maybe help them or maybe expose them more to competition from the giants if those guys decide to push harder into high performance?
That's sort of the core strategic question, isn't it? By specializing, they can really cater to clients with super specific, demanding needs that maybe aren't the main focus for the bigger, broader providers. That specialization can be a real edge expertise, tailored solutions. But the flip side is they're directly tied to the growth in that specific high-performance segment. And if the big players do decide to target that niche aggressively, well, TSS would have to really leverage their existing expertise and client relationships to hold their ground.
Makes sense. And beyond the growth numbers, just offering everything from design right through to maintenance. That sounds like a potential strength for keeping clients, attracting new ones, like a one-stop shop.
Oh, definitely. That end-to-end model can be very appealing. If you need super reliable, high-performance stuff, dealing with one provider for everything, planning, building, support that can simplify things a lot. Less hassle.
Okay, but let's talk potential red flags. The reports are pretty clear. They depend heavily on AI and cloud computing continuing to boom. Any slowdown there could really hit TSS, couldn't it?
Absolutely. It's the risk that comes with riding such a specific wave.
And also, it seems like some detailed financials aren't easily available in these particular reports. Things like PE ratio, debt to equity, free cash flow, ROE, PB, well, the nitty-gritty. That makes getting a full picture of their financial health kind of tricky without digging into official SEC filings. And, while that 523% growth is amazing, we should also consider what was the base? Was revenue super low in the comparison period last year? That context matters for how we interpret that percentage.
That's a very fair point about the base comparison. And yes, relying so heavily on AI and cloud growth, while great right now, carries inherent risk. Any tech shift, economic downturn, it could pose a challenge. And you're spot on about the financials. The headline numbers are impressive, but a proper deep dive needs those other metrics from the filings to truly assess valuation and financial stability.
So thinking about market sentiment, the future outlook, with the AI cloud growth and TSS making these strategic moves like the new facility, sentiment is likely positive, right?
You'd imagine so. The market probably loves those growth figures and the proactive expansion.
And continued growth there, positive earnings reports down the line, those could be real catalysts. But the reports also flag potential risks like, what if new regulations come in around AI, or competition in the data center market just gets even hotter?
Those are the key uncertainties. Regulation is always a wild card, especially in a fast-moving field like AI. And competition, well, that's almost a given in a hot market.
Okay, so wrapping this up. Looking at these reports, TSS definitely seems to be riding a major growth wave powered by AI and cloud. That huge revenue jump, the new facility, those are really attention-grabbing points. But like with any potential investment, you absolutely need to look deeper into the financials, understand the whole market picture. What's the one thing that kind of stands out most to you from all this?
For me, it really comes down to sustainability.
Yeah.
Can they keep up this incredible pace? And how effectively can they navigate that increasing competition and, any potential regulatory hurdles that might pop up down the road? That's the long-term question.
Exactly. It raises big questions about whether this rapid growth can last and where they'll stand competitively over time. So we really encourage you, do your own homework, maybe start at their investor relations page. It's irr.tseusa.com. Check out their SEC filings for those deeper financial details. And hey, if you found this breakdown helpful, don't forget to subscribe, like the video, and leave us a comment.